Good morning, Bookmap community. Welcome, welcome. It's Monday, August 12th. My name is Charles. I'm from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. I look at the market as a competition between buyers and sellers, okay? I'm not paying attention to the fundamentals. I'm not paying attention to what's happening with individual companies or with the Federal Reserve or any of those types of things. I am simply focused on right here, right now, today, are there more buyers or sellers? If there are more buyers, the market is likely to go up. If there are more sellers, the market is likely to go down. And I can look at the market through the lens of intraday, minute by minute. Is the market going to go up over the next 30 minutes? Or I can look at it as a swing trader. Is the market likely to go up over the next few days? So throughout this stream, I will do my best to explain my perspective from both points of view, from a swing trading point of view and from a day trading point of view, and do my best to give some clarity there. Okay, so we're going to start off with the S&P 500 with the ES futures. We're going to zoom all the way out and we're going to take a look at the monthly candles. Jim Dalton teaches something that he calls the top-down approach. And the idea is very simply, you want to start your day looking at the market from a very zoomed out point of view, because there is context in the longer time frame that can give you an edge on the shorter time frame. So if I'm looking at the monthly candles right now, what is jumping out at me? Well, first thing that's jumping out at me is the fact that we made a lower low and a lower high this month on the monthly time frame. We also left behind a big wick at the downside. So the lower low and lower high tell me that the market needs to balance. Again, we're talking about over a period of months, right? We're not talking about today, but over a period of months, the market needed to balance off the momentum that it had for the last 3 months to the upside. Okay. It has done that. There are one of two ways that you can balance off momentum. One, you go sideways at higher prices. The other, you pull back with price. Both of those are a way to balance off the momentum, to essentially squeeze out the weak hands and give stronger hand participants an opportunity to get in the market and do business. We have done that. Okay. So at this moment today, this big wick on the monthly candle seems a little bit bullish to me, that maybe as soon as the market dipped, those buyers stepped in and we're ready to turn around and start heading higher. So it's a little bit bullish, but we need a lot more, information to really feel bullish. So let's zoom in a little bit and we'll look at the weekly candles. Okay. Again, the same thing. We can see that pullback in price that happened this month in the weekly candles. We had momentum, and then we had this big pullback. Okay. Well, in the past, when we've had pullbacks, how many weeks do they last? Right? Generally speaking, how many weeks does a market pull back for? If we start to zoom back, we see they don't last that long. Here's one that is 8 weeks. Here's one that is 6 weeks, 5 weeks. Here's one that is 4 weeks. Here's one that is 5 weeks. Here's another one, 5 weeks. Okay, 3 weeks. 3 weeks. 2 weeks. So we can see these weekly pullbacks, the market doesn't go down forever. It doesn't just go straight down until the end of the world. It can only last for a little while. It can only last for maybe a month, maybe 6 weeks, but it can't go on forever. Well, then we look at last week's candle, and what do we see? Giant wick at the low, right? Giant wick down there at the low of last week's candle. If this week's candle can make a higher high, which it technically did in the overnight, but we'll wait till regular trading hours confirms that. If this week's candle can make a higher high, that is a sign that the momentum on the weekly time frame is coming to an end. Now, that does not mean the market has to V-shape recover. We may just get a higher high and then go sideways down here at lower prices. Okay, I was talking about balancing off the momentum up on the monthly time frame. We're now talking about the momentum down on the weekly time frame. There are two ways to balance off that momentum. One would be to reverse with price and head back up. The other would be to just go sideways at lower prices. So if the market can get above last week's high this week, this morning, basically, when the market opens, that will be bullish to see, but only mildly bullish. Okay? Because it could just look above yesterday's range, come back down, and then we go sideways the rest of the week for all we know. But if we can get above there, it is a sign that the downward move is over. Okay, at least for now, for the week. Okay, so now let's zoom in and let's take a look at the daily to get even more information. Okay, so on a daily time frame, boy, my voice just cracked. Okay. Okay, so on the daily time frame, what are we looking at? Now, we're starting to see momentum up, right? We can see that we had momentum down on the daily time frame. We spent some time going sideways. We talked about one way to balance that off is to go sideways. We went sideways for a number of days, and now what are we doing? We are breaking out of that balance, okay? What happens when we break out of balancing areas? Here's a balancing area that we broke out of to the downside. Here's a balance area that we broke out of to the upside. Here's a balance area that we broke out to the upside. Another one, balance area, broke out to the upside. What do you start to notice about these things? When you break out of balance, it leads to excess. It leads to momentum on that breakout. Okay, now you can get what are called fake outs. This one right here was a fake out where they tried to break the market lower, couldn't do it, and then reversed back through. So this morning, the number one focus that I have, both intraday today and to carry forward as a swing trader for the rest of the week, is what do we do with this balance area here? Are we able to continue the momentum out? Are we able to do one of these? Or do we get one of those? Do we get a look above and fail and pull back into the balance area? Okay. If we can keep the momentum going on the breakout, we can easily head back up towards 55.30. Okay. There's no reason in the world the market can't make a big move to the upside if we can hold this momentum, if we can hold this breakout. So now let's zoom in. We'll take a look at the market intraday on the market profile chart to give us some ideas of what that would look like. What would it look like today, this week, if we were going to break out to the upside and we were going to continue to get that momentum up? And what would it look like if we were to fail and pull back into the market? What are the different levels we should watch and what should we expect to see? Okay, so intraday today, we want to keep the market above 53.45. I'm sorry, I know I have a million levels marked right now and that's a little messy and hard to see. But let me just, while we're zoomed out here real quick, let me just explain. This is the area that I am defining as that balance area. So this is the area that I'm saying if we can break out, which we did last week, if we can come back and back test, which we did on Friday, and then we can hold the support, which we have over the weekend. If we can do all of that, that is what leads to that bigger move to the upside. Okay? So we've done all of it. Check, check, check. All the boxes are checked for the market to continue higher this morning. So what do we need to see intraday for the market to actually go higher? Well, first things first, it's got to stay above that balance area high. It could come back and test it once again, but if it starts to pull back into balance, that is bearish. And we'll talk about that in a minute. But the first thing the market has to do this morning, if it's going to go higher, is it's got to stay above 53.45. Okay? So then I zoom in here quite a bit, and I look at the way the market traded in the overnight. How did the market trade in the overnight? Well, it had one little dip, which was instantly bought up. We spent very little time and brought in very little volume on the lower end of the overnight range. We created this sort of 45-degree angle here, which shows more buyers and more buyers and more buyers defending. And then we created a 45-degree angle at yesterday's high, which is sellers defending. So that tells me right off the bat, the market is playing tug of war right now. What is the tug of war that it's playing? It's trying to decide, are we going to get that big move to the upside, or are we going to fail and get a big pullback? So the levels I'm watching this morning to basically give me a clue of which of those is happening is the bottom of this node right here from the overnight and the top of this node from the overnight. So we'll call that 53.90 and 53.60. As long as the market is in between those two levels, I don't really know what's going to happen. I can guess, I can say, ooh, it looks like the buyers are bringing in support, or, oh man, the sellers are really, beating the shit out of the buyers. I can kind of guess a little bit here and there who's trying to take charge. But the truth is, between those two levels, between 53.90 and 53.60, they're just competing. It's a competition. One side is trying to break the other. The buyers are trying to break through the resistance above so that they can squeeze all the sellers. The sellers are trying to break through the support below so that they can squeeze the buyers. As long as we're between those two levels, we're going to call that a chop zone, a place where the market will just chop around. There's not much edge that I as a trader could have. However, the second we break the overnight high, we start to have an edge. Once we get above 53.90, we know one of two things is going to happen. Either we're going to squeeze those sellers and we're going to start bringing in new buyers, or not. And then that means that the sellers will take control. So when we get up there to 53.90, I'm going to be looking for what we call a look above and fail, or a look above and go. A look above and go would basically mean the market gets above there. We get a little short covering, boop, 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 take out some stops. The market comes back down, and then it starts to turn that into support. If it turns it into support, I am bullish as a day trader, and I am bullish as a swing trader, okay? Because that confirms my thesis that the market broke out of balance last week, back tested that breakout on Friday, and that we are now getting the momentum. We are now getting the continuation that we would expect after breaking out of balance, okay? So if we can get above the overnight high and find new buying, I'm bullish as a day trader and a swing trader. Okay. Now, let's say it doesn't find that new buying. Let's say the market pushes up there, boop, 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 boop. It gets that short covering. It comes back down and it just keeps going right back down into yesterday's range. Well, now I am neutral as a swing trader because there's still some uncertainty in the market. But I am bearish as a day trader because if they open, they get above that overnight high and they don't get continuation, guess what they're likely to do? Come right back down here to this area between 53.60 and 53.54, okay? Because that was the fairest price to do business on Friday. We measure the fairest price as the level where either the most volume traded or the market spent the most amount of time closest to the center of the range. I know that's all very confusing, but the long and the short of it is, if we don't have the buyers to take the market higher this morning, we will come back to what was the fair price on Friday, okay? Because the fair price just means it's a place where both sides feel good about doing business. Buyers are happy to buy, sellers are happy to sell. And so the market is always looking for places like that. It's always looking for levels on the chart where the buyers will buy and the sellers will sell, because that's all the market cares about, is just getting, shares to change hands, getting contracts to change hands. So if we look above the overnight high and fail and we can't keep going, we're coming back to that fairest price. Okay. From there, as we discussed, I would want to see us stay above 53.41. So a look above and fail has me neutral as a swing trader, bearish as a day trader for that pullback down. If I start to see support in here, the market turns around and starts heading back up, I can get bullish as a swing trader, neutral as a day trader, right? Because we'll just be in a chop zone as a day trader, likely to just kind of chop around inside yesterday's range. But as a swing trader, if I see that we pulled back to back test this balance area high again and it held, That's bullish. Okay. Now let's say the market pulls back down. It gets back to that fairest price to do business around 54. It continues lower. It gets down to 41 and it doesn't bounce there. We don't get that support at 41. That is the most bearish scenario. In my opinion, if we get back below 41 and we spend any amount of time down there, we bring in any amount of volume, we can have a little dip. We can have something that looks kind of like this, where the market just pokes in there for about 20 minutes and pops right back out. That would be okay. But if we start to spend a substantial amount of time and bring in any volume under that balance area high, I will be looking for a pullback in price, both as a day trader and as a swing trader. Okay? So I hope that kind of clarifies things for everyone. Swing trader and day trader is bullish above the overnight high with new buying. Day trader is bearish intraday if we fail, but neutral as long as we stay above the balance area high. And if we crash through the balance area high and go lower, both day traders and swing traders should be bearish. If we pull back into the previous balance area and we start to spend time in there, the highest probability is that we're heading all the way down to 54.35. That doesn't mean we're going to make it, and it definitely doesn't mean we're going to make it today, like in one day. I would say intraday, my target to the downside would be the base of these single prints at 52.94. But it would be very bearish to see, okay? Because that would mean the market failed to break higher. So I'm making this as simple as I possibly can. No matter how you approach the markets, this is what will happen today. Either the market opens and gets above the overnight high, or the market opens and gets below the overnight low. Either we get new selling and it's bearish, or we reverse and it's neutral. If we get above the high, either we get new buying and it's bullish, or we reverse and it's neutral to bearish, right? It really is that simple because we're in that tug of war moment. So if you're saying to me, okay, Charles, we get it. You're laying out a scenario for the market to go up. You're laying out a scenario for the market to go down. You're laying out a scenario for the market to go sideways. Which do you think it's going to do? Just tell us, do you think the market's going to go up or down today? My guess, as of right now, 10 minutes before the market opens, I think we're going to continue higher today. To me, this was a good pullback on a longer time frame to allow stronger hands to enter the market. It was a good balancing area, giving traders several days to build their position. And on Friday, we broke out of that balance. Okay? So if the sellers wanted to take back control, they should have pulled it back down over the weekend. Now, again, I'm not saying they can't pull it down this morning. They absolutely can. And I will be watching for signals that they're going to. But if I had to guess right now, I think the market is actually going to continue higher today. My first target to the upside is getting to the high from 8.2 right here. If we get more momentum from that, it is filling the gap we left behind that day up to the low from 8.1. So the first target to the upside is 54.18. The next target to the upside is 54.45. If both of those targets are reached and the market is still giving me signs that it has momentum, the target after that is 54.72. Okay? So what am I looking for? I'm looking to see the market get above the overnight high and not fail. Continue to bring in new buyers. Then I'm targeting the first move to 54.18. If we don't get sellers there, if we don't get a look above and fail there, I'm looking to get to 54.45. And if we don't run out of steam there, I'm looking to get to 54.72. Each one of these areas, the market could reverse. It could completely run out of steam and start to pull back down. So I'll be watching, I'll be monitoring for continuation. I'll be asking myself, with all the signals that I look at, are we getting more momentum up or down? Now, that being said, so I've just given you my opinion. The market could go up, down, or sideways today. I've showed you what levels to watch. so that you understand what's happening. I've told you, in my opinion, as of now, with the information I have at this moment, I think the higher probability is up. And now I'm going to give you a contradicting piece of information, something that is bearish to me, which I got from the Bookmap this morning. So if you zoom all the way out on the Bookmap, you can see there is a giant node of liquidity right here at 52.50. Okay? That is just sitting orders, sitting long trades, sitting in the order book. That is not there by accident. Okay? That is there for a reason. I was talking about it all last week. I'm going to bring it up again this week. You can see it's been sitting there for days. Let me zoom out even more. You can see this level has been sitting there with those contracts literally all week, last week, and it's still there today. Why is that there? What are the market participants who laid in all those orders? Why do they have it there? It is not necessarily to try to bring price down to 52.50, but it is to stop price from running too far to the upside. This is likely market makers in the options market who don't want the market to make a huge move to the upside. So even though I'm feeling a little bullish today, the reason I say we may run out of steam at the overnight high, or we may run out of steam at the high from 8.2, or we may run out of steam when we fill out the gap, instead of being like, I think this thing's going straight to the moon. It's because I don't think this thing can go straight to the moon as long as this node of liquidity is still sitting here. It's like a lasso, it's like a rope on price. They got a rope tied to price. So the further the price tries to go away, the more it's getting tugged back, like a bungee cord. You know what I mean? It just makes it much, much harder for price to run away to the upside with that big node of liquidity there. Now, I will throughout the day today, particularly if we do get momentum up, I will be coming back on occasion to check on this node. Because if we start to get momentum up and then this node disappears, well, the market is free as a bird, man, and it can just fly. So I'll be keeping an eye on that node around 52.50 as well. Any questions for the pirate? Let me know in the chat. We got 93 people hanging out. Only 20 thumbs up this morning. Good morning to Will, Jay, Willie T, Laura. Jay says, thank God it's Monday and the casino is open, baby. Kevin is here. Michael, good morning to you. And first for last, welcome, welcome. Any questions for me about today's market? Thank you, Kevin. Appreciate you. Willie T, a second good morning to you. Mark says good morning from the UK. UK's been in the news a lot lately. Shit's going down. Jason in the house says, smash those likes. I completely agree. It's one little button, one little push. Hola to Ships. Nap in the house. Good morning to you. All right, let's click over and take a look at the NQ. It's been pretty much in sync with the ES as of late. They've been moving together. So I have a feeling my analysis is going to kind of be exactly the same. No, not exactly the same. So I would describe the NQ, rather than being in a horizontal balance, the way that I described the ES, I would describe this as a channel. Okay, something that looks somewhat like this right here. Let's see if we can map that out on the daily. No, we cannot. That's so interesting. That just shows you what a difference the context is of the information. when you're looking at candlesticks and when you're looking at profiles. Because profiles, we can see where the market spends the most time and brings in the most volume. And we see that it's just bouncing between these two. Okay, so I am going to go ahead and just describe this exactly the same way that I described the ES. We're going to use this large node here at 18,504 as our balance area high. That's our deal or no deal level. So again, as long as we're above it, as swing traders, we're bullish. Okay. If we get below it, we start to get bearish as both swing traders and day traders, that the market needs that larger pullback. One thing that I have always talked about with the NQ, if you want a simple map to understand where the NQ is going to go, look for large nodes on the cumulative. All right, I've got some of them marked right here so you can see. This market loves to just go from node to node to node very quickly, often within the same day. Okay. So it'll go from this large node down to this one, down to this one, down to this one. And then when it fails to go lower, what does it do? Turns right back around to this one, up to this one, up to this one. When it fails to go higher, what does it go back down to this one, down to this one? When it fails to go lower, what does it do? Comes right back around again, so on and so forth. Okay? It loves to bounce from large node to large node. That's just how it does business. So to me, that large node right there around 18,504 is going to be that deal or no deal level. We could dip down to it once more, but as long as we find support, we're turning around and we're continuing higher. Okay. If it fails, we're heading down to the next one, 18,307. So I would describe myself as a swing trader, as bullish above 18,504, bearish below it. What I'm looking for intraday as a day trader, oof, this is very tight. Very, very tight. I'm looking for the market to stay above 18,580 to be bullish for continuation higher. So I'm looking for chop in between the overnight high, 18,698, and that low I just mentioned. And if it breaks above, same thing as the ES, I'm looking for new buying. Means I should be bullish as a day trader and a swing trader. If it looks above and it fails, I'm looking for a pullback down. And if it gets below 18,580, I'm looking for a move to 18,504. Okay. This to me is a much tighter range, ironically, than the ES. But I would also say I'm bullish on the Q. The thing that gives me caution is this 45-degree angle from the high. That means that this market is not going straight up this morning. Even if the market wants to go higher today, it's not like it's going to open and just go straight up. It is going to have to fight and grind and poke and poke and poke to get through that overnight high. So I expect both markets are about to chop. Because it's a chop zone. Okay. The market is open. I'm going to switch over here on the ES. On the Bookmap, I'm switching to looking at it through Trader Map Lite. That just filters out some of the arbitrage bots or some of the market maker bots. These brackets that drive us absolutely nuts above and below price. So you will see me click back and forth from time to time between these two charts, and that is why. This one just gives me a little more clarity for reading the order flow. Chop zone. And so you say to me, you say, well, Charles, if you think the market is going to go sideways, inside this range between 53.91 and 53.60, if you think we're just going to go sideways, why not just scalp trade? Why not just like enter short, take profits 2 points later, enter long, take profits 2 points later? You know, if you think it's going to just keep going up and down and up and down, why not just enter trades? Because every one of those trades is a gamble. That's the thing about these tug of war zones where the market needs to play tug of war first thing in the morning, is that you never know where it's going to flip and reverse. You never know if it's going to come back to that level. So you might have a lot of luck scalping in a chop zone. You know what I mean? You might have trade that works and trade that works and trade that works, especially if it keeps chopping and chopping and chopping. But every one of those trades is a guess. And I just don't take trades when I guess. So this morning, I want to see us get below 60. And then I'll know if we get new selling, I should be a seller. Or if we get a look below and fail, I should buy the next support. I wouldn't buy the look below. But if it came back down into support, I would buy that. Or if it poked above yesterday's high, found support, I should be a buyer. If it pokes below the overnight high and pulls back in, I should be a seller. Okay, targeting getting back to 53.60. So I'll wait until it gets to one of those levels where I'm not gambling. I'm using market generated information. I'm using the thing the market is telling me it is doing right now to know what it is likely to do next. Because it's a chop zone. Chippity chop zone. Percy in the house. Good morning to me and fellow pirates. Jad says good morning. So no questions at all from the chat. Every one of the 128 of you is just perfectly clear on everything I said. I am awesome at my job. Collard says, no risk, no reward. There's a difference between trading reckless and being prudent with your risk. Yes. So there's two different ways to think about risk, right? There is the risk of whether the trade will work or not, right? Like what is the probability that if I go long or if I go short, it'll work and I won't get stopped out. And then there's the actual material risk of the trade. If I am stopped out, how much money do I lose? If you can learn to mitigate both of those risks in your trading, you will have a lot of success. I guarantee it. I guarantee you will have success if you can mitigate both those risks. So what does that mean? It means only take trades when you have a high probability of the trade working, right? Which means no guessing, no gambling, knowing this trade has a high probability of working and then choosing to enter the trade. That requires overcoming emotions. That requires sitting sometimes for long periods of time waiting for an opportunity. Okay. But if you can do that and you can protect yourself from the actual capital risk in the trade by choosing to only lose a guaranteed small amount of your position size, your overall sizing, you'll have success. It's not rocket science. You can be a profitable trader and make millions of dollars a year being right 4 out of 10 trades. You can literally be wrong more than you're right and still be profitable as long as you're measuring your risk, as long as you're managing your risk. Kuthrop says, good morning from Saudi Arabia. Welcome, Saudi Arabia. If you have any questions, let me know. If this is your first time, this probably seems so confusing. You're like, what am I even looking at on this chart? There's so many things happening. So just so you know, what I have here is two different charts of the same asset side by side. So both of these are looking at the ES, the S&P 500 futures. The one on the left is a market profile chart. So that basically just takes the data and organizes it in a three-dimensional view, right? A candlestick is a two-dimensional view. It shows you how much time the market spends and what price it goes to. A three-dimensional chart shows you how much time, price, and volume at each price level. Okay, so we can see areas right here. You can see there's a lot more letters, right, than there are down here. Well, that's the market spending time in that level. They came down, found support, found support, found support, found support, found support, found support. Okay, so what can we assume if we come back there? We're probably going to spend some time. We're probably going to find support. We're probably going to bounce and bounce and bounce. Same thing with the 45-degree angle at the high. We're going to get smacked down and smacked down and smacked down and smacked down. And then we can see volume, right? We know because we had this large node of volume right here on Friday, and the volume tapered off in there over the weekend, that we do not want to get below that level. Because if we get below 53.60, we're going to start to squeeze any buyers who bought in late in the day on Friday. And we're going to start to squeeze any buyers that bought in the overnight. And that could lead to a further pullback. So knowing where the market spends the most time and brings in the most volume gives us an edge to both predict where the market is going to go and to know how to do business once it gets there. And then over here on the Bookmap chart, which is the chart on the right side of the screen, I'm looking at the order flow. And I'm just paying attention to how things are changing. The market was pushing up, right? What did they do? They brought in a bunch of liquidity to scare the market away. Well, what happens now if this liquidity around 53.80 suddenly starts to disappear? Those orders start to get pulled. It starts to get lighter and lighter in there, which is happening as I'm talking. What happens? The market reverses and comes right back up to it. Because right now, this move to the downside is being scared away by this liquidity. Okay? Very common behavior in a chop zone. Because it's a chop zone. Speaking of which, we are looking for support here around 53.70 for a bounce. Because it's a chop zone. So what are we noticing right now? As we're pushing into the area where we're looking for support based on the overnight trade, what is happening to that liquidity above in that node? It's disappearing, right? See how it was like darker red in here and now it's getting lighter and lighter and lighter? Well, now the market can come back up. Boop, 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 boop. Right? So that's why I have both these charts, to be able to see where the market is likely to find support or resistance, and then see if the current market generated information, the actual orders in the order books right at this moment, are confirming the idea that I have. Seeing this liquidity get thinner tells me we're going to get chop. Because it's a chop zone. George says, are there any levels on Bookmap that I'm looking at? So other than the one I mentioned where there's that large liquidity node down at 52.50, there's nothing that super jumps out at me on the order flow right now. As I said, I think we just need to play tug of war for a little bit. I think we need to go sideways in this range and then seeing how we break out and what happens with the liquidity there, that'll give me some levels. But a lot of times, first thing in the morning, it's just competition. Again, the buyers are trying to break the sellers. The sellers are trying to break the buyers. So you can't really guess ahead of time exactly where that's going to happen. You just have to assume it's going to keep going sideways until it does. Scooball in the house. Been a minute, Scooball. Good to see you. RK says millions a year is a little unrealistic, and there's only a handful who actually pull that off. Aim for 100K. Yeah, but the conceptual idea is the same, right? If you can make 100,000 a year, you can make $1 million a year. Maybe not instantly because you have to size up. You know, you have to make 100,000 a year for a certain number of years to get enough capital to get to where you can make millions a year. But it is absolutely possible. And I can tell you from conversations that I've had, it shocks me how many people there are out there trading very large size, even retail people. Like, you don't think there are. There's a buttload of money that moves through this market every day. Okay, moment of truth for the market. Looking for a bounce here at 53.60. If the selling continues, that will be bearish to see and will increase the odds that we're heading down to 53.42. So the buyers have got to defend this low, or down, 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 the market will go. Okay, we're getting a little bit of a bounce, but it's bad taper. So we need one more poke to the downside. So can anybody in the chat tell me what is bad about this low? Well, there's the break. What I was going to say was the icebergs. Bookmap was showing us there were icebergs holding up the market right there. So we know it needed one more poke through, but we just got it. So do we get a bounce? Or new selling? All right, new selling. So swing trader, I'm still bullish as we are still above 53.40. But as a day trader, I am now bearish to pull back down and test 53.42. So I'm looking to turn what was previous support into resistance. So can they now turn either this node right here around 53.60 into resistance, or can they turn this area around half back at 53.70 into resistance? If they hold the resistance at either one of those levels, the target to the downside is 53.42. So on NQ, the target to the downside is 18,503. They got to hold 18,603 to get down there. Okay, looking for resistance right here, 53.60 or 53.69. Wow, wow. For continuation back down below the low. Nap says, what's considered large? I think he's asking about on nodes of liquidity for the NQ. I literally just visualize it. So whichever level is poking out the most. When you zoom out like this and you look at the cumulative, whatever areas seem to poke out the furthest, those are the large nodes. So I don't have an exact number of contracts or anything like that, but just relative to all of the trade that's happened in this general area, you know, where did the most happen? Andrew says, what do you mean by bad taper? So what we're always looking for at a high or a low is what we call good taper. Good taper is just defined as the number of contracts at the high or the low slowly decreasing. Okay. So for example, the overnight high right here has good taper. We had 4,000 contracts, 2,000, 1,000, 900, 100. You can see the volume just tapered off like that. Whereas the current high this morning, not good taper, right? 7,000 contracts, 8,000, 5,600. That just fell right off a cliff. So that increases the odds that at some point today, we will come back for that level. Now, one step at a time. At the moment, the momentum is to the downside. So as long as we're below the halfback, as long as we're below 53.69, I don't care about that. That's not something I'm thinking about. However, if the market passes back through there, guess where it's likely to go? Whoosh, right back up to that high because we didn't finish the auction up there, right? So each piece of information is only reliable when it fits the context of the scenario. Right now, we're not worried about the taper at the high, okay? Thob says, does it matter if the POC is not moving down with price? The POC won't move down yet because the POC that I look at is the POC based on time. Okay. So the way it works is it figures out what level did the market spend the most time closest to the center of the range. So since the market's only been trading in the A period, it's only been trading for less than 30 minutes, the A is going to be right at the halfback. And it's going to stay at the halfback for the entire A period. Now, if the market were to poke a little bit lower, boop, boop, then yeah, it would move down with the halfback a little bit. But really the time point of control doesn't matter until we get into the B, C, D period, and we can kind of see where the market is spending time. From that point, you do want to see the POC moving with price. So for example, if we look at yesterday, we could see at the start of the day, the POC was there in the A period, and it was higher in the B, higher in the C, higher in the D, but then it came back down in the F. Well, what did the market do? It trended higher and higher and higher, and then it ran out of steam and went sideways. Okay? So as long as the POC was moving higher, so was price. And when it stopped, so did price. So just as a repeat of what I said before, I am looking for a move to 53.42. I am not bearish beyond that. Okay. 53.41 is a balance area high. It is an area where the market is likely to find buyers and reverse and head back up. If the selling continues below there, then I'll get very, very bearish for continuation, both for the rest of today and into the days ahead. But if we get down to 42 and we bounce, I think we're looking at a choppy sideways day. Let's see what happens. Okay, so from this point, the sellers are in control of the market. How do we know that? Well, we had a lot of support and they pushed right through it. They got to the overnight low, so they are in control. If they want to stay in control of the market, they need to bring in more new sellers here. The sellers do not want to just look below this overnight low and then turn around and flip right back up. So I'm looking for resistance at, once again, 53.60, and then up at the halfback, 53.66. If they can't hold that, then the market will just pop right back up through the opening price. So the sellers need to step in here and smack this market down if they want to keep the momentum going to the downside. It is very common that areas that were acting as support will become resistance. Areas that were acting as resistance will become support. So we can see we had resistance on Friday in here and a little bit in here. Okay. Well, that became support in the overnight. That's where the buyers stepped in and defended in the overnight to turn around and take the market to a new higher price. So now those areas might become resistance for the next move lower. And again, I'm just looking to get to 42. I don't necessarily think we need to go any further than that. Any final questions for the pirate before I say goodbye? Let me know in the chat. And by the way, if you have not yet, please smash that thumbs up button. What are we here for, if not to like one another? Collard says, correct me if I'm wrong, didn't you used to use the nicey tick in your analysis? I still do. I absolutely still do. It's right here. Speaking of which, we want to see those ticks get smacked down. That's how we'll know we're getting resistance. Kuth says, I've been having a heck of a time copying my chart settings from NQU to my ESU chart. If you're talking about in Bookmap, I would just reach out to their customer support. They'll help you out. The people at Bookmap are fantastic with getting back to you. Knapp says, what is considered trading large size in trading? It doesn't matter. There is no, large size, small size. It's relative to your account size, right? There are guys who work, for the big firms and stuff like that trade 1,000 contracts at a time. But that doesn't mean you should ever be trading 1,000 contracts at a time. To me, 3 to 5 contracts is large size. To me, being long or short with 5 contracts is like as much heat as I can take. But for some people, 5 contracts is like how they start to build a position. So it's just it's based on how much capital you have to work with. The goal is just to not lose more than 2% of your account in any one trade. So if you wanted to go short here at 53.60, with a stop above 53.69, how much of your account would you lose? If you went short with 1 MES contract, how much would you lose if you went short with 1 ES? How much would you lose if you went short with 5 ES? You know what I mean? You just want to keep your losses very small. And that's how you choose your position size. Scooball says, look below and fail. Too early. I got to see them break through the halfback. Right now, I'm seeing momentum in the ticks, right? I'm seeing those ticks below the 0 line. So that will change if they can stay above it here. But right now, I think it's probably going to smack down once more. Like I said, 53.42 feels like that might be the end. That might be all they get. But the sellers are in charge, at least for now. For the moment. Elliot, thank you. Cog says, Charles, this is awesome. Where can I learn more? What an excellent question, Cog. If you guys look up in the banner at the top of the screen, you will see I have a membership. For just $10 a month, you can come hang out with me and the pirate community every morning and talk about markets. I only charge $10, and the reason for that is it's less than a single tick on the ES. I'm talking about 1 25-cent move on the ES, and you can pay for your full month's membership. Give it some thought. Piratetraders.io if you want to join. Okay, so the market is poking through the first resistance, so now we're looking for them to hold that halfback, 53.66. As long as they hold it, I'm bearish for another move to the downside. If they cannot hold that halfback, if that starts to poke through, then we're heading back up for the opening price at 53.81, and we will likely go sideways for a while here. Okay? Here we go. Moment of truth. Dun dun. Dun dun. Dun, 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 dun. That's it, folks. That's all, folks. Sorry about that. Jesus, wrong. Right at the end, right before I say goodbye. Okay, so what does this mean for now? Well, it's neutral intraday today. It means we're going to keep going sideways. We need to spend more time chopping around in this range where the overnight went sideways. Okay. As a swing trader, though, it is a little bit bullish to see because we stayed above that balance area high and we got to look below and fail of the overnight low. So I suspect the next move to the upside, I don't think we're going to go straight there. It's going to be very choppy this morning. Will be through the opening price. If we can get new buying, then we can get bullish. But for now, we are back in a chop zone, and I think we're going to be going sideways for a while. Probably a few hours. So with that, I will wish everyone good luck. If you're a member of the brigade, head on over to the private stream and we will hang out there. If not, enjoy the chop, enjoy the sideways, enjoy the grind. Like I said, new buying above the opening price would be bullish for continuation to the upside intraday today. New selling below the overnight low would be bearish for continuation lower intraday today. But for now, they need to go sideways. They need more of that tug of war. Why do I say that? If the sellers had won and taken control, they should have been able to hold that half back. It should not have poked above. They also should have been able to smack these ticks down below the zero line. So the fact that they broke the half back and the ticks are above the zero line means we are going sideways. And we got to wait and see what happens at the opening price. 53.80. It's still a chop zone. All right, thanks a lot, guys, and we will see you next Monday right here on the Bookmap channel. Okay, bye.